First up, it's Kerry, all the way from Armonk, New York. He's always has something interesting to say, a favorite listener of ours. He wonders if Bob and I have noticed the headline regarding Northwestern Mutual Life Insurance. It's the third largest U.S. life insurance company, recently purchased for its portfolio. Now, sit down for this one. For the first time in 152 years in its entire history, the company purchased a load of gold, almost $500 million, noting that it is concerned about falling asset prices and it has turned to the yellow metal as a safe haven hedge against further declines. The CEO, Edward Zor, said in an interview, gold just seems to make sense. It's a store of value. During the Depression, gold did very well. The downside risk is limited here, but the upside is huge. He said, we have stocks in our portfolio that have lost 95% of their value. But he says gold's not going to lose 90%. It's not going to drop from 900 to 90. It's just not going to happen. What a victory for the gold camp.
Of course, it's enough to make a person who's been involved in gold as long as I have very happy. I think one of the reasons why investment management hasn't been more into gold for years and years is that it's always been looked at as a strange investment, and people, professionals don't really understand it. They don't understand it conceptually. And as you know, I was a broker for 28 years. They used to call me Goldie. They would always say, well, how are you doing? You seem to do well all the time. And I'd say, fine, but the only time they ever really came to me is when gold got hot during those years and said, well, what should I buy? And I would tell them. It's really a great victory. It should be looked at that way. One of the things I didn't look into, and I really should have, is how did they do it? Did they buy gold bullion or did they buy the ETF? Well, the reason I'm concerned about that is I have great misgivings about the exchange-traded fund SLD. Just recently, as of yesterday, and this has gone on several times in the last several months, we had 11 days in GLD without any change. Now, that defies any kind of odds whatsoever. And there's no outside audit in what they have, and I always become suspicious of that. I know what they present, but, who knows what's behind the scenes? Who knows whether the United States government has pushed pressure on them and said, look, we'd rather you buy futures or other derivative contracts and not go in the bullion market and take delivery. And, the United States government is a big hammer. And so I suspect that they may not have anywhere near the gold that they say they have in physical form. And so that's what disturbs me. And I also suspect that the United States government has borrowed gold from GLD from time to time and may owe them gold for all we know, because everything is done in secret. And that's, again, why I would like to see an outside audit. I will not recommend GLD or SLV for that matter. And I think people should buy the shares and the coins and the bars, and I think those are the safest ways to do it. For those who have strong stomachs, you can go into the COMEX and gamble in that market. But I'm thinking that there may be changes coming in COMEX, and I'll tell you what tripped my hand yesterday. COMEX has stopped allowing physical deliveries of steel and aluminum. That's the first time that I know of that they've done that. What is to stop them from keeping or stopping physical delivery of all metals? And it may be what they're heading for. I'm just guessing. Now, they say they think they'll do more business. I think they're wrong, because there are those who want to purchase gold or silver and take future delivery, and it's a cheap way to do it. And so it remains to be seen whether they'll do that, but I got to think of suspicion they might try it. If GLD has contracts, first of all, they have broken the rules that they've set up. If they're lending gold to the United States government, I suspect that might be breaking rules as well. And if we were to find out, and this is hypothetical, I don't know this, but if we were to find out they only had 10 or 20 or 30 or 40% of what they say they have in gold, that would be serious, because the owners of the gold that didn't exist would have to be paid in dollars. And if they wanted to stay in gold, they would want to go out and buy it, quote, again. And that would really send the market up big time. So that possibility exists, and I'm concerned about it and have been from the very beginning.
Well, the only thing I'd like to add in here is you talk about accumulating gold instead of turning to the ETFs. GLD and SLV are good trading vehicles, but for the long haul, I like gold Krugerrands, very small markup over the physical bullion price. And of course, junk silver continues to be a favorite of mine because practically at spot price, sometimes even lower. So it's a fantastic way to pick up precious metals as we go through the summer doldrums in anticipation of that big breakout above $1,000 an ounce on the way to $1,200, $1,300, because that's where we're headed next. And if you believe the CEO here of Northwestern Mutual, he says gold could double or even rise 500%. Even those of us in the gold camp who keep pounding the table over gold's virtues, we do this all the time, and people sort of discount our opinions. But this is one of our traditional foes, if you will. And he's jumping ship, so to speak, from the traditional Wall Street Titanic into a gold-lined lifeboat with the rest of us. $500 million. So I want folks to get their minds around this. If that isn't an impressive enough thought, the next big story will be when more of these big players wake up to the incredible opportunities of gold and silver, and they start to look in these portfolios and they see that their investors are down 50, 70, 80, 90% or more, and many of these stocks just aren't coming back. Just think of how that demand will send metals and commodities, plus energy, through the roof. I mean, imagine billions and then trillions of dollars flooding into a tiny gold and even smaller silver market. So his $5,000 gold target may prove to be even too conservative before this market blow-off comes to pass.